Monday. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope you guys had a great weekend, a wonderful Easter weekend, spent some time with the family, got to relax. Markets were closed on Friday as we are taking a look at what is happening starting with this new week. So let's go ahead and dive in, starting first with the S&P 500. So the S&P, we had a little bit of potential breakdown that did give us a breakdown yesterday right at the Sunday night open. We dropped a little bit away from there, but not a whole lot has really happened since that point. I will say that we are in a bigger picture downward trend, and so we're looking for opportunities to re-enter the short. Now, our bigger picture downward trend is slowing in momentum, so be a little bit cautious in re-entry, and I think that it's better to re-enter on maybe a 15-minute time period. So when I look at this 15-minute time period, you certainly have the origin of this move down right here, which we're approaching, but it's not my favorite level. Matter of fact, I prefer the level up a bit higher, coming right into this area up here at 44.10. Now, the reason I like this area up here at 44.10 a bit better is it's a little bit of a wick over wick below a pivot high. Stop has to go obviously above the pivot. But the other thing that I find interesting here is that we've got this long upper wick right there, which is pointing to the supply that's up above us. And so 44.10 by 44.19, I think, is a decent reversal point moving forward. Looking on the 1 hour chart, that puts us right inside of this area. So we want to use the 15-minute as our entry time frame, which is really what's going to govern our 6-candle rule as well. Looking next at the NQ, and what I can see here in the NASDAQ is that we have a bit of a breakdown level right below this 13,890. Now, we didn't get quality basing there, so it's kind of just hanging around. And so I think that we're still going to continue bearish price action. And once again, I'm going to go to the 15-minute to look for a proper entry. The level that I see here is very similar to the one that we just saw in the S&P, a little wick over wick below a pivot high. I lovingly refer to those as noisy crickets, those levels where we've got an opportunity. And it's right at a whole round number of resistance at 14,000. So combine the whole round number of resistance with the wick over wick level in the context of a bigger picture downward trend, and I think you've got a pretty decent reason for an entry to the short side right there. Now, there is a little demand area below us, but remember, any demand below us has to be taken with a grain of salt as a confirmation entry only. So we're sitting above a 15-minute area here. Now, how do I know that it's a 15-minute area? Because it's in purple. That's why we color code our lines based upon our entry time frame, and this is a bit of an unbalanced wick over wick area. So I'm going to make it a confirmation entry. We know that it's confirmations because it's counter trend anyway. But it is still valid as a potential, long entry. But remember, you are going counter trend in this situation. Taking a look at crude oil, let's take a look at crude oil and gold. So crude oil has come into our reversal level. We did hit that level without giving us a really strong move away. Now, we hit it again yesterday and have gotten a decent move away for a confirmation style entry. But in reality, my guess is most of us are not in that short. If you are, take your stop, move it to break even, take a little off the table, because I don't feel like it's going to hold much longer. Now, our level that we identified on the Wednesday DMC, we got a really nice retouch and a move away. And so now what we're looking for is 4-hour trend is higher swing high, higher swing low. So we are back up in a 4-hour trend. So I will be looking for an opportunity to get long in this setup. So looking at the 1-hour chart, where is that best level? Well, there at 98.40 is a really good level. Rally base, very nice move away. We also have this area right in here that was identified after this strong move higher. So 103.80 by 102.86. And we're still just hovering around $100 a barrel on oil. We have not on a daily chart put in a truly higher swing high, although we're coming close to it. And so just keep an eye on that as well. Weekly chart, looking at the weekly chart, we have a couple of stronger moves down. But let's see if we continue to drop in crude oil. Gold has rallied back up to right around $2,000 an ounce. We broke above what is a potential breakout level. We didn't quite get quality basing in front of that breakout level to give us a true breakout trade, but we did get a retest of that area before then starting to move higher. Now, if we come back down again and we retest a bit lower, I would say this area is a pretty clean level. The downside is we gapped away from it and then retested it with this green candle. So I will put a confirmation entry right there at that 1977. I think that could be a pretty good entry for today, however. So keep an eye on that one. Natural gas, we can see that nat gas, we had a continuation of the strong move up. We talked about taking a breakout on nat gas last week, so hopefully some of you are able to do that and capture a little cheddar. Another breakout exists above this level here. We are in I don't want to call it a melt up phase of nat gas, but certainly natural gas is rocketing to the upside. And so when you get a stall, it could be a chance to get back in and continue to ride that wave and that next move higher. Looking at some of our bonds and currency markets, the euro, we had bounced off the bigger picture demand, and then rallied to the opposing supply. And now we're coming back to that area of demand. If I look at this on a 4-hour chart, we are in a downward trend. And so that downward trend that exists, we would be looking for retest back up to the 1-hour time period. And we saw this big move down at the end of the week, last week. And so inside of there, do we have a 15-minute supply area worth selling? And when I look at this, we certainly could use this pivot area right here. That would be probably the best level for a retest to a short setup. I've been looking at the Japanese yen on a pretty regular basis, and we looked at this one last week and talked about a potential breakdown in the yen. We have broken down. If you didn't take advantage of that, you're getting another bite at the proverbial apple again, right down in here. And that's kind of what the yen's been doing is basing before then setting up breakdowns, basing breakdown, not retesting any of the supply levels. So continuing to look at the shorts on the yen, as all of our currencies are a bit on the bearish side. Looking at some of these levels, there is some demand that we're approaching, but all of this demand is suspect because we are approaching all of these levels in the context of a bigger picture downward trend in all of our currency markets. So just keep that in mind. Look for quality supply areas up above more so than demand areas down below. Right? Example being this Australian dollar gap fill level right here. Would be probably a better entry. If we retest it, we may not come all the way back up to that level, but if we do, that's a pretty decent little entry. So, all right, well, that's all I have for today, everybody. If you guys have any questions, as always, shoot us an email, support@tradersarmy.com. I appreciate you joining us today. I look forward to attacking you tomorrow. See you soon. Peace out. Later. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.